Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Country's third largest pharma drug company and a campaigner for affordable drugs across the world, Cipla has been charting a new path for itself. And at the helm of this new journey is Umang Vohra, Managing Director and Chief Executive Officer of the company. And today he joins us here on CNBC TV18 to help us understand how much of that journey has he completed. Thank you, Umang, for sparing time for CNBC TV18. First up, it's been almost 2 years that you've joined. A lot of changes in Cipla, a lot of work, a lot of consolidation that you've done in the business. On operational side, what are the changes that we are now seeing in terms of, the results of this consolidation?
I think operationally, our teams have rallied around try to improve the outcomes we have in some of our key markets. And we'll start with patient outcomes, whether it's in India or it's in South Africa, in the US, some of our emerging markets. We've actually taken a lot of initiative to reach out to patients digitally, otherwise through the doctors. And I think all of that is coming to bear. So this is our customer reaching activity. We've done a lot on costs. Our CFO, Kedar, is a ruthless cost champion. He keeps going after costs that we can find. And I think the results of that we're seeing in our numbers as we're beginning to see them over the last, I would say, 18 months or so. There's a lot of work that still needs to be done. And I think the teams are working excessively hard. These are not just cost-cutting measures, but they are measures that remove complexity in our business. We've been guiding towards 18 to 20% EBITDA. And now when we look back, we find it difficult to believe that we were not even there a few years back. So I think we're on track. I'm a little concerned about our revenue and how well we could grow them.
A lot of this consolidation has meant that there is not so much sustainability as far as revenues is concerned.
So revenue is a challenge. I think it's not just a challenge only for the players with big businesses in the US. It's a challenge even for us. And I think there are a couple of reasons for it. We have to factor in disruptions, right? So I was at a meeting recently and I told my team that, look, a quarter in a year, something or the other will happen, right? So last year we had demonetization. So talking India, just India. This year you had GST. And in reform-oriented environments and governments, businesses have to adapt to these type of situations. So we're adapting to that. But that basically means a quarter gets disrupted of your growth cycle. And India is a sizable market for us. The emerging side of the world, you have volatility and things like that, right? But I'd like to believe in our core markets. If we look at India, we look at US, we look at South Africa, and some of the large emerging markets, I think our growth story is intact. We've even grown Europe this year. So I'm of the opinion that I'm not unduly concerned about growth trajectories within our core markets.
US certainly is something that everyone's talking about for all the structural changes in that market, for the pain as far as pricing is concerned. You are one of the late entrants and somewhere you get an edge, but there are also concerns as to what your pipeline is. All your recent products have seen a lot of competition also in the market. And obviously there are concerns on that. How confident are you of the pipeline in the US market?
Me as in me, I think I'm very confident.
And as a company?
Also, I would like to believe so. I think maybe what I could add is that there are certain things we can't control, right, in the market. And it's, we take the example of two products. We launched budesonide. We were the 5th entrant. We still think there's a huge amount of value in that product. If we talk about Sevlamer, we were the 4th entrant, but everybody entered within a month, and the value in that market eroded. Both Sevlamer and budesonide, for me, were limited competition products and for our company, right? And we thought they would bring a lot of value, but budesonide brought value, and Sevlamer possibly didn't bring the amount of value we wanted. The FDA is working more to a clock at this stage, and therefore the time difference between when you enter and when somebody else enters gets narrowed considerably. And so does the opportunity, right? So I'd like to believe we have a good mix of products where we think not too many people will be there. But I'm also humbled by what happened at Sevlamer.
The entire complex generics or the limited competition product segment in itself is now getting competitive, is getting crowded, so to say. What is your plan B then, you know?
I'd like to still believe there are segments where which are not getting competitive.
Which is what?
Like respiratory is a segment where you will not see more than 4 people or 5 people. And we'd like to believe that, comparatively what we've heard, at least on Adware, there's no generic till today. Right? We'd like to believe there'd be 3-4 filers in a 4 billion market. So I think there are segments like that. There are segments around complex peptides, right? Where again we think the market may be 3 players, 4 players, right? And those are the markets we're after.
How much of this will be, driving the revenue and the margin push in the US market?
Maximum. This would be the reason.
So what would be your, assessment?
See, I'd like to believe that in respiratory or the inhalation space, you could have products in the $50 to $100 million range.
So in the next 2 to 3 years time frame, what would be your assessment?
I think we could launch about 1 or 2 of those, right? We'd like to believe that budesonide for us is a product that could be, if not 50, somewhere close to 50, right? And so it's exactly products like this that we're after. There are more in the respiratory space, but there are also a few in the oncology space, few in other categories.
Particularly on generic generic Adware, so to say, what is the status? You were starting some clinical trials on
Yes,
that.
yes.
You're still a few months away from filing that product.
Oh yeah. We are almost, I'd like to say we'll at least be a year or more than that from filing. Yeah, because our clinics are just about starting, right? And it'll take us a while to finish our clinic. It's a large patient trial. It's not these type of drugs are almost 700, 800, 1400 patient type trial studies. So it'll take us a while to file.
With so many others in line to file with Sandoz, Hikma, Mylan may refile, Teva already with an approval, and I think they've already launched it, Airduo, in the market. Do you think even, in this time frame, if 1 more or 2 more launch, in the US market, it somewhere, diminishes the entire assessment that you've been making for the US market?
Yeah, if your assessment is that I'll make 500 million, for sure, it'll diminish that. But if our assessment is can we manage 100 million in a 4 billion market, I think we do it. Now, having said that, Teva's product is not substitutable, right? It's a non-substitutable product, so it doesn't really become a generic to Adware. We've heard of Hikma and Mylan and Sandoz and their products, and probably they'll be before us, but we'd like to believe we are the 4th to come into that market. 4th entrant in a 4 billion, all coming in a staggered manner.
But US is a market where the first mover advantage works.
That's true. But now, we're late for that first mover. We'll try and be first mover in some of the other categories that come out. But even 4th entrant for Cipla at $100 million, it's good value.
Europe also, the way the progress has happened on this product has not been to the level that it was anticipated. Yes. So, what are the learnings there? There are 2 different markets, I understand.
So let's talk through our approval in Europe. I think we have over-delivered in Europe. I think we have over-delivered, and in any case in Europe, this is not a big product. This is a big product for the UK. In Australia, we've over-delivered. Right, we were the first generic to GSK, and I'd like to say we've taken the share that we had to. In UK, we've not been able to do it, right? And I think it's also linked to how much discounting and rebating the brand product wants to do.
In the US market, the other big driver that Cipla had thought would be Invagen and the Invagen portfolio. In the last couple of quarters, you've been making impairment losses based on certain products from that portfolio. How much value is still there in Invagen?
I think there's value in Invagen. I think for the strategic reasons that we bought Invagen, there is value in it. Because
that was scale.
That's scale. Because see, what happened was the market consolidated. There were 8 customers, they became 4, and now, I don't know, maybe the 4 become 3. And for Cipla to go and say, well, we're bringing Adware, would you guys like? And they'd say, who's Cipla? Which Cipla, right? So Invagen got us the ability to compete on scale. So as we look at it now, Invagen is the 9th most dispensed pharma company in the US. The impairments we've taken is to reflect the market value.
Because looking at the impairments that you have already booked for, based on Invagen, at least as of now, it looks that that acquisition has not worked for you.
So what I would say is that we bought a base business of $200 to $220 million. That stays. Nothing's happened to that business.
Don't you think it had been an expensive one at that?
Not really, because we bought it at about a 2 multiple. There's no deal in generic that gets done at less than a 2 multiple today, right? So I think we were okay from a multiple perspective. But you're right. What's gone wrong is that there was enough value that we placed on a product like Sevlamer. Sevlamer was an Invagen product, right? Unfortunately, the market changed so rapidly on it. So the moment that market did not play to its potential, we had to impair what we had created for Sevlamer, right? And so those are the type of impairments that we've had to take. Now I'm hoping that some of the other products in that portfolio eventually play out.
Welcome back. We are in conversation with Umang Vohra, MD and CEO of Cipla. Global assets that are coming on the block right now. Sandoz has, spoken. There are some more assets that Teva could hive off. Would you still be in the market for looking, and if you are already looking at something?
We will always look. But if you were to ask me whether our capital allocation would be more towards generic, and that ticks the one, I think US generics less. Emerging market generics, which are deep market pools like China and Brazil, yes, we tick that box. Specialty as a new area, whether we'd spend more money into specialty, for sure, yes. So our capital allocation choice is to probably not spend too much on US generic, move our allocation towards specialty in the US, and move our allocation a bit towards our core markets here. We'd be buyers at any time in India. We'd be buyers anytime in South Africa. And beyond that, we'd want to allocate our capital to a China or a Brazil, right? So that's how we're thinking about it.
And what is the kind of, war chest that you would want to keep aside for any acquisition opportunities?
Actually, we have no war chest. We're a company in debt. Our debt equity is about 0.2. So there is no war chest we have. It'll come as we see the right opportunity.
But what would be the kind of size of acquisitions that
if I had to think about it, I think the company would be comfortable going to 0.5 debt to equity as a ratio. We'd be fine with that.
You said in India you would be always a buyer. What would be the spaces that you would look at?
We'd love to be buying companies or portfolios in dermatology. We'd love to look at the CNS space because we are not in CNS. And we'd love to fill our portfolio with diabetes.
Are there options available in the market?
So I'm not sure who are sellers today. I think everybody in India is a buyer. But if anything opens up, we'd be happy. I'm using this media to also communicate our interest.
That you want to look out for?
That we would always be ready for and looking at any opportunity that comes in India.
For buying, because, all the media reports or, market buzz always is that someone's looking to buy Cipla in itself, and Cipla could be a seller.
I can't comment on that.
I have looked at divesting a few of your emerging markets assets. Does India feature somewhere? Is there something that you think doesn't work for
India?
Cipla? In Cipla, which you would...
So I think we've done quite a few. We've done our vet business, we divested that, and a couple of these portfolios in other countries, Croatia, etc. We've sold all of that. So all that's done. Would we like to divest any part of our business? Not sure. If we do a really huge deal in Cipla that transforms Cipla for the future, and the likelihood of that is low, could we use one of our businesses as a means of raising some amount of cash? For example, could we think of our India business or our South Africa business in a different manner, right? Yes, but we will never sell them.
Okay.
So we'll never be sellers for any of our businesses. We might use them to bring in capital, but never to sell them. But I don't think it's going to be the core markets. At this point in time, Cipla, in no part, is up for sale, right? So Cipla's done away with what it needed to, and right now it's in a mood to consolidate. For the
Indian market, how does the growth look like? You spoke about regulatory changes. How is the environment right now in terms of price control, in terms of, the push that you would need for growth?
I think we'll continue to see volume growth. Volume growth of 8 to 10% will continue. I think pricing growth is something which is a question mark because it's linked to regulation. I'd like to believe India is, the way we've positioned our India business, it's a good trajectory for a 10, 12, 14% growth, that range. So I wouldn't be surprised if next year we come in with a growth range between 12 to 14%. The long-term business fundamentals are intact. I think there's a lot of penetration that needs to happen in India still. There are lots of parts of India which are not as well penetrated, either from a healthcare perspective or from a medicine perspective. And I think that's really what we're riding on. So for us, India is a growth market. It is a very important market for us, and we're going to continue to grow it.
Okay. Recently, you've announced a tie-up with Roche on two of their anti-cancer drugs that you would be marketing and distributing. Not much was revealed in the press release in terms of, what you're really looking out for in this sort of partnership.
Over the past 1 year, we've tried to create Cipla as an alternative to multinationals who believe that their penetration for their drugs would be larger in India. We've done Novartis, we did Vildagliptin with Novartis, we signed up Azmarda with Novartis. And then we looked at diabetes, and then we said, okay, we need a partner there. And Janssen and Cipla got together for canagliflozin. There are many more that we're talking about. Roche's partnership is all about deepening the paradigm. Right? We believe that there's enough headway both for tocilizumab as well as for bevacizumab, right, in India, and these are deep markets, and we believe Cipla can play a role in penetrating.
But how have these, products and these partnerships helped Cipla in terms of, building your revenue base or, getting growth per se?
So I think they're quite. Some of what we've done with the products is quite sizable. A lot of these products could, in the next year, add up to almost 150 to 200 crores of sale. Right?
All these products.
All these, could add up to more than that, 250 to 200 crores.
It's a noticeable shift from what Cipla used to be, and what's the way Cipla progressed in pharmaceutical industry across the globe for decades. It's absolutely different. It was a patent challenger. It was a challenger of high-cost drugs. It was a challenger of multinationals who would bring in a monopoly into the market. This certainly is a noticeable change. So, are we seeing Cipla change entirely from what it used to stand for?
So let me step back and say Cipla has changed. What it stands for has not changed. Right? So let me explain that. Cipla always stood for bringing products to the customers and the patients and the doctors where no alternatives were available. When we were allowed to do it through the patent regime, right? Because at that time there was none. Cipla went and challenged these products, tried to get them to be compulsorily licensed, etc. When there was regulation, and Cipla believes in respecting regulation, when there was patent regulation around this, the only way to do this was through partnership. So what we stood for in trying to bring these medicines back to people has not changed, right? The way we operate may have changed. Right? But our objective is the same.
One of the biggest criticisms in the last 2, 3, 4 years for Cipla has been that Cipla has seen too many changes too soon. In terms of the management changes, in terms of the way business is being operated. Is there still some more changes that we would wait for Cipla, or is this now the stable path that Cipla would move on?
So let me give you two things, right? If you're asking me whether this is now where Cipla is in steady state, the answer is no, right? And I would fail this company, and I would fail everybody who works here if I were to tell you that Cipla is not going to change or not going to continue to change. There will be changes because that is our environment. Look at the environment we operate in, right? You have regulations that are changing everywhere, and we just have to make sure that Cipla stays relevant as an organization. I think the question I would want to ask you is, are we going to disrupt Cipla in the future? And the answer to that is no. I think we believe where we've reached is okay for the long term. I don't think it's about which businesses we'll shut down, which countries we'll rationalize. I think we're past that, right? So all that is gone. So I think we're trying to push towards stability. And we believe, a business that has reached a certain stage of stability, but we are restless to grow it more.
Absolutely. So what would your, milestones now be, let's say 3 years from now, 5 years from now?
In 3 years, we'd want Cipla to have a sizable share of its revenues from the specialty arena, from an arena of proprietary medicines, not necessarily generics. I would say if we can get to about 20%, that's great. Right? That's one. Because this 20 begins to build up over time. We'd love to be the company of choice for doctors in India, where we'd like to move our market ranking up, not necessarily be only as a number 3, but possibly try and move that up here. Frankly, on the US generic side, just out of our execution of respiratory, we'd like to come closer to the top 5 rank, right? We won't be among the top 5, but today we are 9th most dispensed. Hopefully we can move towards the 7th or 8th most dispensed company. And we'll always want to be caring for life, right? So if we change the ethos of why a Ciplite comes to work in the morning, and that ethos changes to profit, I think I would have let the family and the investors of Cipla down.
Till 2-3 years ago, there was a Vision 2020 $5 billion revenue. Has that changed or it still stays?
Well, the vision for $5 billion is still there. It shifted out a couple of years, right? In all reality. I think we don't define it that way anymore. The numbers are an outcome. We'd like to grow Cipla a lot faster than what we've seen in the last 12 or 18 months.
And what would be your targets be then?
Well, I might, in the sense that we'd love to grow Cipla higher than a CAGR of 10%, right? Over the next couple of years, considering price erosion, everything, all of that inside. Some years we could grow higher than that, some years lower, but over a 3-5 year period, if we can manage that growth, it's great. If we can get to 15% CAGR, we'll be thrilled, right? But we'd like to grow this great organization.
Just 2 quick quantitative questions. US market, Europe market, and India market, and the Africa business. What sort of revenue mix change do you anticipate in the next 3 to 4 years time frame? And which would be your fastest growing markets there?
So the India market, according to me, should not change too much from a percentage mix contribution, because Cipla grows quite aggressively, 12 to 14% on a base which is almost $1 billion. Right? So I don't think the share of the India market is going to go down. I don't think the share of the South Africa market is going down too much, because South Africa seems to be delivering market-beating growth for the past 20 months or 24 months that I've seen it, and even before that, before I joined. The US will grow the fastest because the base is the lowest, right? And therefore the share of that US base in the mix will increase. I'm not sure Europe will grow as fast, but I think Africa and India will try to maintain their ranking. So this will be possibly at Europe and maybe some of the emerging markets.
All right, Umang, thank you so much for your time.
Thank you so much.
And
Thank you.
being with us here on CNBC TV18.
Thank you, I enjoyed it. Thank you.
We wish you luck.
Bye-bye.